Welcome back to Finfluencers. The platform I'm going to talk about probably needs very little introduction. Hargreaves Lansdown is extremely well known in the UK, particularly with the retail investor. But the man we're going to talk to has been there about a year. He runs the equity research team. It was a real education talking to him about how he goes about looking for ideas for his client base. Let's go take a look. Welcome back to Finfluencers. Delighted to have Derren Nathan, Head of Equity Research from Hargreaves Lansdown on the show today. Hargreaves Lansdown, for those of you who don't know, one of the largest platforms out there for the retail investor, and hoping to learn a little bit more about Derren, his role there, his team, etc. Derren, welcome to the show.
Thank you. Great to be here, Neil.
Let me start by, why don't you just give us a little bit of your own background in terms of where you've come from when you joined Hargreaves and your role there.
I've been in equity research in various guises for close to 20 years now, predominantly from a corporate broking angle actually before I came here, but with some retail facing and also for sponsored research, so helping under-researced companies get in front of institutions, as you well know. You're the number one in that game. Although I've worn a generalist hat for most of that time, I've had a few sector stints, namely in TMT and also on the leisure sector. But the main focus up to now, and included now to a certain extent, is growth stocks, although it's a bit wider here. So, it's a lot to do with where our client interest lies. We have a very diverse client base, and therefore we tend to go for maybe slightly larger stocks than I had been in my last growth role where I was for 8 years. We can also go a bit further afield, so quite a lot of European and US listed stocks, which is, a much bigger part of the assets we manage, or at least the clients manage for themselves than it used to be. So definitely a broader role than perhaps I've been in before, and it's also about evolving the offer we have. We have an excellent research product. We are adding things into it. We're doing more sets of views now. We're starting to roll ESG out, ESG analysis, and that's part of a wider effort to make it more user-friendly, easier to navigate, but essentially, and maybe get it out to a wider universe of stocks over time as well.
Okay, and you've been there almost a year. I think July is going to mark the 1 year anniversary. So plenty of time of getting your feet under the desk now. What do we come to appreciate about Hargreaves Lansdown that maybe us from the outside might not necessarily pick up?
As you mentioned, it's the #1 retail investing platform in the UK, and I was very aware of it from corporate broking, but perhaps mainly just of the execution-only platform side. Obviously, sometimes you see HL quite high up on the shareholder list, although underneath that there's thousands of shareholders. But what's become clear is how it's much more than just a click and trade platform. HL very much lives by the mantra, helping to empower people to save and invest with confidence, and that really does pervade everything that HL does. There's a huge learn section on the website. You should also keep an eye out for a whole host of new tools that are being piloted to help clients meet their financial goals. And there's a lot of actually holding the investor's hand. So, that goes down to the service desk, a very well-manned service desk, and everybody's been pitching in to help with that at the end of tax year recently as well. So not just people on the service desk, but I think it's, making sure that the client investing journey is pain-free, as pain-free as it can be, but also that people are investing in line with their own objectives.
Okay, and I was always intrigued about the research function within Hargreaves Lansdown and what it does. So what is it that your team is trying to, well, talk to me a little bit about the team firstly, and then what you're trying to do for your clients.
It's part of a wider team. There's an overall research team which looks at ESG, it looks at collective investments, it's looking at asset allocation models. The equity research team looks at over 100 of the most widely traded and held stocks on the HL platform. Now there is a bit of an overlay, like we tend not to get too involved in the really speculative stuff like, you know, the game stocks, because, you know, we can't really research those on fundamentals. It's available to anybody at the moment on the Hargreaves Lansdown share research page. We write it in a style that we hope anybody can understand, but at the same time we want it to offer opinion and insight to the full range of investors. But one thing we don't do is offer investment recommendations. I think there's a number of reasons for that. If you think about it, we have, you know, close to 2 million clients, all with different investment objectives, and you can't just have a one-size-fits-all investment recommendation. But what we can do is help give investors the information they need to come to their own investment decisions, come to an opinion, kind of, you know, in the same way that you do, hold their hand through the investment story, and also events that may impact that opinion.
Okay, so I noticed the other day on LinkedIn that you'd mentioned that we've now started following ASML,
yes,
for instance. So I just want to understand, what is the process of when you follow a stock? How do you go about research? Do you do a sort of background level of research before you announce that to the world?
Yeah, very much so. So I'll perhaps talk about where ASML is featured a bit later on, but stocks can come under coverage for a couple of reasons. We do a periodic review of our coverage to make sure it's still relevant to our clients, and also that, you know, we're not really getting involved in anything that we feel, you know, maybe it's not appropriate to get involved in, and also if we include a stock in our guide. So, you know, there's a 5 shares for the year guide that we do. That gets quite a lot of eyes on it. Then we have really a duty to keep following that stock. And one of the guides we've recently put out is 5 shares for an ISA 2023 ASML, after a very rigorous round of you know, screening and you know, not always friendly discussions between the analysts. That was one of the ones that made it to the list.
Okay, interesting. I mean, I think what I've been a sort of huge advocate of the retail investor. Sometimes you will get, I think, quite an old school view from corporate management teams that it leads to volatility in the share price, and, you know, they tend to buy and sell and sort of on the short term. And I'm sure there are some, but actually the general sense is that that's not the case. You get an enormous insight because of all the data that you get from Hargreaves Lansdown. How would you challenge the view that you know, this is an important audience for the corporate to address?
I mean, there's definitely pockets of more speculative investors. I don't think our platform is actually one where they're too prevalent, actually, for various reasons. But you know, it kind of goes, that kind of high frequency trading goes a bit against our ethos, and we've found it to apply to quite a small slice of our client base. And we've actually, over time, we've seen a shift, certainly by client numbers, to more risk-averse clients who like to tread carefully. We're actually more worried about clients who, you know, sort of from one year to another don't engage with their portfolio at all, because it's unlike, you know, unlikely that they're going to get good outcomes. So we've done quite a lot to try and re-engage and nudge those clients to at least, take a look at their portfolio, see if anything needs rejigging. But from my team, we, as I said before, we don't really tend to cover the stocks that get ramped up on hot air. So then sort of, come back to your angle, from the corporate broker angle, I think companies have to be a bit crazy not to engage with retail, because, I think 15% of UK stocks are held by retail investors. Well, you're going to quote me on that. I can't guarantee that.
It's roughly where the ONS data is.
And you do need some liquidity, and that's a really important source of that liquidity. And actually, if you don't have that liquidity, that's where the volatility might actually seep in.
Okay, that's useful. And we've seen quite a lot in the press about championing the retail's investors' ability to have a voice in terms of how companies run. M&S's chairman is quite active in this. What are you doing as a business to sort of help this?
I think the most notable thing we've done of late is launch an online proxy voting tool, which I think it covers all UK and EU stocks. So this gives a major class of shareholder a better chance of having their voice at the table when it comes to how their companies are run, and that can be a number of things. It can be on major transactions that they can now vote on without having to, send letters in and follow a protracted process. Also, who runs the company, so they can vote on the board composition, and also importantly, and what's become more important, is how the business manages its corporate and social responsibility, and that's something that we're looking at quite closely as a firm, not only on our own, internal ESG, but also on how we can make that part of the investment process. So as I mentioned, we're rolling that out into our equity research and commentary, but also on our internal fund management. We have our own range of funds, and they're now signatories to the United Nations Principles of Responsible Investment, and that's also something we look to when putting external funds on our wealth shortlist, and if they're not on the UNPRI, we look to a commitment to do so or a similar standard.
Okay, interesting. We're in the launch, I guess, of the ISA season. And it's certainly an area that I think you tend to get people to focus on in terms of, here's some ideas. So what key ideas are you suggesting to investors on the equity side for ISA season this year?
I'll go back to our 5 shares for an ISA guide. ASML was the first one that you mentioned. It's a Dutch company. It provides a core type of technology for microchip manufacturers, semiconductors. It's actually the only supplier in the world of that type of equipment. So, it's got a deep moat. A lot of time and money's gone into developing that. And I think it's exposed to mega trends for the demand for increases in computing power. And this is multiple things. There's a lot of hype around about AI at the moment, but it's also actually the energy transition's going to actually is a driver for semiconductor demand. So actually, the end users are going through quite a lot of pain at the moment. You've seen some quite nasty results from the likes of Samsung, but these guys have such a long tail in the order book that I think, they might see that order intake slow a bit, but I think they're going to keep growing for a long time. Yeah. We've got quite a range of companies in that guide, actually. British American Tobacco is another one. Very cash generative, very high yield. It's weathered inflation really well because of its brand power. Clearly, there is a higher ESG risk for a company like that, so it might not be for everybody, and also perhaps that might hold back the chance of a re-rating because there are certain institutions can't get involved. But if you're in it for the yield, I think it's an interesting one to look at. Another one is Bunzl. They have become a key business-to-business supplier through excellent execution of a buy and build strategy, lots of little bolt-ons. It's nothing particularly exciting when you hear it on paper. It's stuff like food packaging and safety equipment, but it's delivered very consistently. It's done high single-digit growth year on year, and there's a good chance that will continue. So for a long-term investor who's not too worried about price dips and flips and wants to take advantage of compounding, I think that's a really good one to look at. Another one is Caterpillar. Now, industrials, they're not totally counter-cyclical actually, but it's another one exposed to good long-term trends. Things like new areas of mining, so that's the energy transition again, but they've also got things like green hydrogen generators, which are going to be a key part of the energy transition as well. So an interesting stock. Also, it's not, it can be a bit lumpy, but repairs and servicing is growing well, so that's helping to smooth that out and maybe de-risk the investment story a little bit more. Another, stop me whenever you feel free, but I might go a little bit beyond the 5.
Yeah, sure.
LVMH, Louis Vuitton, Moet Hennessy, that's been going from strength to strength, shrugging off inflation and economic worries. I think that's probably because its high net worth customers are less sensitive to inflation perhaps, and it's been posting some really impressive numbers. It's got very high margins, and perhaps there's a bit of an emerging market play there as well as the likes of China, maybe even Africa in due course, start to see more of an emerging high and upper class, then people actually want to start buying into these aspirational products. Yeah. We've also done a little bit recently an article on stocks for junior ISA, so maybe it's got a slightly longer term hint to it, and some of the same themes emerge there. Brands, power and long-term growth. So Diageo, which maybe not quite for the kids to buy the products as yet, as it's beers and spirits, but that certainly falls into that category. And one that is perhaps a little bit more child-friendly is Disney. I think it's got real long-term growth potential from the streaming service, which has a massive client base. Yeah. It's not actually making money for them yet, but if they get that part of it right, then it will complement the likes of the parks, which are having a really nice bounce back from the pandemic.
That is a fantastic run through of our list of names. I'm curious, I know as an analyst, working on the sell side, as a sell side analyst, you would have reasonable access to actually company management. So if you wanted to learn something about a company, you could pick up the phone. Is it any different, or do you get the same kind of access from where you are?
I think, maybe we're not that much on the corporate PR's radar, because I've come from that background. I know, where to go to get it. I think most companies do want to access the likes of HL. Certainly when I was on the corporate broking side, it would have been quite a nice feather in the cap to have it. So I think it's there if we want it, but sometimes we need to chase it.
Okay. Well, it's intriguing to understand. Finally, I mean, we do these things really for education. And let's describe you as a veteran. If you had to give any advice to someone who is just starting their investment journey, you know, and particularly, I guess, given the amount of education you're currently doing at AHL, what would you typically sort of draw people's attention to?
I think it's important to invest in what you understand. Now, it doesn't mean you have to be an expert in, you know, it doesn't mean avoid drug development countries because you're not a PhD, but at least get an understanding of the risks involved, of how difficult it is to bring a drug to market, of things like patent expiry. And so if you don't have that understanding, then I think that's where the likes of research professionals like Edison and the team at Hargreaves Lansdown can help. And also, I think start small if you're just starting out. I think at Hargreaves Lansdown, as I said, it's about empowering investors to invest with confidence. And I think that's, you need to get your whole financial resilience package right for that. So it's, you know, if you've got, you know, massive credit card bills, for example, maybe get them down before starting to invest in the stock market. And also, you know, there's no harm in, you know, putting the bulk of what you do with professionals who do it day in and day out. So, you know, put some money into collectives, but, you know, that's not necessarily an easy job either. There's a huge range of funds out there. So, you know, get access to fund research and kind of make sure you're taking the best horses in that race. And then, you know, coming back to direct business investing, I think try not to follow herd mentality because, you know, it eventually that will get to a bubble situation. You do want to go, you know, don't be completely contrarian, but I think make sure you understand the investment case. So, you know, I think I'm just saying there, you know, I probably wouldn't get involved in Bitcoin or meme stocks, but look for businesses that can create value through their products or in the services that they give to their clients. So, you know, and maybe in time they'll become indispensable. I think Apple is a prime example of that. And also, you know, let the numbers do the talking. So it's, you know, I think where you're looking at speculative types of investors, they might get involved in fads, and that can be in small caps, or it could be in large caps. You know, you look at Facebook and its kind of foray into the metaverse hasn't been that successful, actually. It doesn't mean you can't look at disruptors of the future, but maybe look at people who've done it before. So, you know, you've got Microsoft, for example, is you know, riding the wave with ChatGPT at the moment, but actually, you know, you probably wouldn't bet against them getting it right. Also, I think diversification is really important. Nobody gets it right all the time, and you know, you can't avoid black swan events like the pandemic or, you know, financial crises. Also, as we were talking about high frequency trading, I think time in the market is really important. You know, it gives you the power of compounding, and there's many studies been shown that if you were in a certain index for 20 years or so, and you miss the best 10 days of those 20 years, which can be at any point in the cycle, then you're going to miss out on a massive amount of performance.
Yeah, and I've heard lots of people advocate, which is why, make sure you invest regularly, because you are going to. The chances are that you will catch one of those moments in time if you do that, right?
And it will also, if you do that, it will also smooth out some of the downside as well.
Excellent. And it's been fascinating, I love hearing about, what you're doing. We are big champions of the retail investors. And I think we're both in many ways trying to do the same thing, which is empower them to make better choices for themselves, empower them to make better decisions. Thank you very much for watching Finfluencers. If there's any other key investors that you want to see, please do let me know. But for this one, it's been a great pleasure to have Derren Nathan from Hargreaves Lansdown on the show.
Thank you, Neil.